Welcome to Keep What You Earn, your judgment and jargon-free zone for entrepreneurs of all levels. Get ready to learn how to scale your business, save money in taxes, and create a business that grows your wealth. If it feels like the financial side of business is like eating your vegetables, well, then think of this podcast as the ranch dressing to make the process a little more enjoyable. My name is Shannon Weinstein. I'm a CPA and business owner on a mission to simplify money and empower others through knowledge. I hope this episode inspires you to take action, but remember that the information we share is for educational purposes only and is not individual tax advice. Now that we got that out of the way, let's start the show. As I work with more business owners who are looking to raise capital for their businesses, I'm noticing a few trends in terms of what is working when it comes to getting investors to agree to invest their capital. And I'm also just seeing a lot of the same mistakes coming up. So I wanted to dedicate an episode to sharing all that with you, but also to reminding you that if you are looking for investor capital, if you're looking to sell equity and take on investors, you really have to essentially sell the investor the way you would a customer, but understanding their perspective and understanding what their sort of triggers are, like what will get them to say yes, what's in it for them all the time. And that's what I want to focus on first is being super clear. If you're going to be asking for investor capital, being super clear about what's the problem that your business solves. And specifically, why is your business positioned as a unique solution to that problem? We talk about this all the time in marketing, but this is basically marketing on steroids when you're not just asking someone to buy your product to solve their problem. You're asking for investors to put their money in and make a bet that you can solve that problem for other people. So they have skin in the game in the form of betting on you. So you want to convince them in a way and sell them on the fact that you're going to provide the solution and that you are the best positioned product out there. So you want to be looking at competition. You want to be looking at the problem and how pervasive the problem is. And if the problem is something that the investor can relate to or has seen before, this is actually really helpful. So when you're actually identifying the problem and solution for your business, you also want to be targeting investors that not only have the capital, but also may have a personal connection to the problem that you solve. So if you are, for example, you're doing a fast food company, but everything is organic or everything is farm to table, then you're going to want to find people who highly value those types of things and would actually use your product too. So the idea is that the investor should be as passionate about your product as you are, but also passionate about you being the person to solve that and making sure that you're positioned to actually solve that problem in the market and that they perceive that problem themselves so that they're essentially convinced that this is actually a real thing. You also want to have data to back up why this is a problem, why you are a unique solution, and what you've already generated. That gets into not just the momentum of what you have, but what is the opportunity out there that you can seize? So, what is the market size? What is the demand? Who else is out there in the space right now? If nobody is out there in the space, is it because the barriers to entry are too high, or is it because nobody else has really taken it as far as you have or gotten the patent, the trademark, et cetera? What is your opportunity and how are you uniquely positioned in that market in order to succeed? So you want to be featuring those types of things and like what makes you special in a sense. Understanding the total addressable market, which we call the TAM, and the serviceable addressable market or the SAM. This is basically a couple of figures that represent how big the market is of who you could possibly sell to, who don't have a solution in place and who have this problem, or who are looking for a different solution. So having data to back up that market opportunity is going to be key, and being able to actually articulate what that opportunity looks like and doing it in realistic figures where it's not, this is a $1 billion industry. And it's like, yeah, the overall industry is, but what's your niche? What's your market? What's the capacity? What's the capability of this company? And how are you going to grow and scale it? You also want to be talking about the business model that you follow. What are your revenue streams? What is your pricing strategy? What are the economics per unit? So what is the price, the cost, the gross profit on items? How are you looking to scale and grow your team as time goes on? And we're going to talk about that as well. But understanding how you have solid projections, which we're also going to talk about, and what the model is going to be able to service. So, are you geographically diverse? Are you doing virtual work? Like, how are you saving money on office space, right? By running this company virtually? How are you going to foster recurring revenue streams through your model by having a subscription base or having some type of reoccurring revenue and marketing, right? So, how does that look and how do people buy and buy again and increase their lifetime value? So, that's a key piece. We also want to talk about momentum or traction, which is like, what have you already done? What is the deal flow that you already have in place where you're just basically seeking capital in order to fulfill on something? You are best positioned as a company seeking capital. You're best positioned in front of investors if you have the deals on the table and you're like, I just need money to buy inventory. I just need money to go and fulfill on these orders. You may have seen this in Shark Tank, where the entrepreneurs will pitch the sharks, and typically the sharks will bite at opportunities where the entrepreneur says, hey, I have a deal with Costco. I have a deal with Walmart. I just need money to fulfill on it. They love that because it means that they don't have to go seek those deals. The deal's already on the table. They just need to fund it. And all the hard work is basically already done. They just need to put up the money, and the entrepreneur, the company will be able to fulfill. So if you have traction, if you have momentum already built through deal flow, that is huge. Or you want to be able to articulate and present where you are in that journey so you know what is on the table. So if you have already secured a location, if you've already secured a market, if you've already gotten contracts with people, we want to know that in your investor presentation, and we want to know that you're already operating and you're already able to generate a projected operating income very early on. That is huge. The other thing you want to be looking at is how is your team structured, right? And what is the compensation? So you definitely don't want to present that you are paying yourself and your officers like a butt ton of money out of the capital of the business in order to run it. Nobody in the investor seat really wants to hear that we're basically funding your lifestyle. We want to hear that it's going toward research and development, that it's going toward expansion, toward payroll for hiring the essential team members, and that people aren't taking excessive salaries. So being really clear about what does your compensation structure look like, who are the key people that you want to have on your team, and how do you want to present their roles. I also found, and this is not just like a pat on the back to CFOs, but I also find that when you have an investor deck and you say that you have a CFO, it does go a long way because it means that your projections are probably not complete bull. So if you have a CFO on staff, it is a good look, even if it's fractional, because it means that you will be able to present numbers, be able to do financial reports that are accurate, and that you won't be kind of winging it on that front. Because the next thing I want to talk about is your financial projections. You want to have these laid out for your investors. And admittedly, this is something where even investors don't ask a ton of questions about this, even though I think they should. You want to be ready for those questions on the financials, the metrics, the margins. It's just like Shark Tank. You want to be ready with your numbers and know them inside and out. You want to also be aware of where you see the business going. And you can absolutely have aggressive projections of where you're going to be. I also feel like these projections are definitely like kind of made up most of the time. Like they're kind of pie in the sky, perfect view. But I think if you can bring them down to earth a little bit and make them realistic, people can see what their growth trajectory is and where their money's going to go. You also want to have an outlook, I believe, for your investor. So, as an investor myself, me and my husband will look at possible investments in companies. And we have looked at this before several times. And what we look for mostly is what is the plan for exit? Like, what is the goal here? Is the goal to grow and then eventually exit from a private equity standpoint, or exit and have another owner take over? Is the goal to make this cash flowing and pay dividends ongoing? Like, what is the goal, and when will the life cycle of this business end theoretically? And that might change, admittedly, but if you don't have a clear picture of what you're hoping for in the time horizon, even something to estimate, that is kind of, not to say a red flag, but it's something that we are not happy to hear, because we want to know that the company is super clear about their outlook, because our money will get tied up in that company for X years and we will participate on the exit or on the valuation. But we want to know, what's your time horizon look like? Is this like a 20-year situation? Is this a 5-year situation? Is this a get in, get out situation? And, finally, I really want to emphasize that one of the things that you should focus on a lot in your investor deck, which goes beyond the projections, and most people don't realize this, is the founder themselves, because I don't think you realize how emotional an investment is in terms of having trust in the founder. We would invest money in someone, and I say someone in particular, in someone who has proven themselves over and over again, who has a track record, who I know can do great things with the company. Also with someone who will be able to add value to. So if I have a unique skill set or Jason has a unique skill set that they need, or that something that we can advise on, that's also key. But we think about it in terms of, where are there opportunities for the founder to leverage their skill and their experience? And basically, we're betting on this person. We're betting on the captain, not the boat, or betting on the jockey, not the horse. That's the more appropriate analogy. Betting on the jockey, not the horse. So by doing that, what we're trying to do is figure out, who is this person? Are they qualified? And are they really motivated to go grow this company? We want to see a founder or a owner who is really pushing, hustling, and driving. We don't want to see somebody who takes our capital and then takes 5 years to get started and doesn't form the LLC and doesn't do all the paperwork and doesn't keep up with the books. Like, that feels lazy to me. So I want to make sure that they are hustling and that they are really working hard with our money. So when it comes to coming up with an investor pitch deck, or in general, just soliciting capital, these are all things I want you to keep in mind, and just make sure that at the end of the day, you're super clear about your ask, that you're going to also come to the end of your presentation and say, we're looking for an investment of $100,000. We're looking for an investment of $50,000. And we're also looking for strategic investors. So if you know anybody, this is another thing too, is you want to get connected to other people who have influence in your space. So if you can find people to act as a board of advisors and or invest equity into the company to be able to, help it grow and to advise based on their experience, the more the better. So just always be open, always be communicating, always be networking. And I would emphasize too, if you're even like toying with the idea of raising capital for your business, start a lot sooner with the networking side. Tell them that you're starting a seed round, talk about your business, start selling it. It's just like marketing. Talk about the product before it's available, get people to hype up about it, build up demand, and then open up the round for investors. And then you'll find out that people are willing to come to the table because they already know a lot about it. But if you're going to open up a seed round, for example, for your company, and you haven't done any sort of investor marketing or networking, this is going to be a lot harder, because you're going to have to form relationships. You're going to have to really sell a lot harder than if people knew you. And it is exactly like sales and marketing, where if you have a personal brand and you have a lot of content and you have a lot of notoriety and your people are familiar with you, you're going to have an easier time selling your product or service because they feel like they know you, they know, like, and trust you. The same goes for investors. So you need to make sure that you're getting in front of the right people, that you're creating relationships, and that you're actually fostering those communications, because you never know who your next investor might be. So keep all of this in mind and make sure that you're asking for the investment super clearly. You know what you're looking for, and you basically don't stop talking about it, because that's the way you're going to be able to raise capital, is if you are constantly making people aware that that's an opportunity that they have with you. We realize that CFO services may not necessarily be accessible to everybody. And that's why we have packaged our CFO services into a power session for you. With this single purchase session, you'll be able to navigate the financial scorecard with me personally on your business and figure out what constraint you need to unlock next. We're going to give you direction, clarity, and we're going to find ways to increase your profitability, increase your cash flow, and make sure you never run out of money. Okay, if you're interested in booking a power session with me, I only do a couple per month, so make sure you jump on quickly and sign up. Check the link in the show notes for more information. I can't wait to see you in a power session.